Okay, good morning, everybody.
Well, hello.
Thank you so much.
You're going to give it a few more minutes here and get people are joining the call here. So let's give this about one more minute and we will get started here.
Yep, everybody grab coffee.
All right, well, we'll get started here. Hello, everybody. It is now midwinter. And, well, sorry, midwinter, middle of February. We're nearing the end of winter, which is great. I'm actually here in Dallas today with the team at Box, and it's going to be like 75 degrees. I actually am cringing leaving when it's so nice this afternoon to head back, but it is my son's 18th birthday, so I need to get back to that and looking forward to that. But looking forward to this warm weather, even though it's a brief little bit I'll get, but looking forward to this coming my way soon. Anyways, just want to get started here. Today we're going to talk market update, seasonal purchasing strategies, and whoops, let's put this. My name is Scott Edling. I'm Director of Pricing and Strategic Solutions here at Box, and with me today is Ali Colloway, our Senior Pricing Analyst and also Strategic Solutions Senior Analyst as well. And today we are going to talk about Box a little bit and just kind of a brief overview about that. For the first people joining the call and they're new to Box and what we are. And then we're going to go into a market update. I'll be doing that, and then Allie's going to go into some seasonal purchasing strategies that I think is going to be really beneficial and hopefully eye-opening, and will prompt some big questions and how to work around the markets right now and where we're at. So with that, I'm going to let Allie take it away here and talk give a little briefing about Box.
Awesome, thanks, Scott. Good morning, everybody. I'm here to introduce Box. So just in case, I think most of the people on this call are familiar with Broker Online Exchange already, but just in case, we like to do a little bit of overview here. So Box is a master energy broker. We're licensed in every deregulated market, and we partner with every major supplier. We're here to give individual energy brokers or even larger shops the options that they don't have, whether that's a different payment option, different suppliers, different markets that we can get into, a whole product mix, and we are here to work for you. We have an awesome team of account managers, your pricing desk, and a whole team of strategists that we have that you can pull from, that are resources that are available to you working with Box. You can see here we're licensed in all of our deregulated states. We've got green for natural gas only markets. We've got blue for both power and gas availability. And then we have a little gray, some darker gray with the stripes through. And those are going to be our large commercial and industrial natural gas markets. So these markets do have deregulation for natural gas. Honestly, the whole nation is deregulated for natural gas. So if you're a big enough customer, you've got options, but there are minimum thresholds here. So these are not areas where you would ever see matrix pricing. These are areas that would be custom requests only. So keep those in mind. I think our next slide here has our suppliers. You'll see a lot of our big names here coming up. We've got our Engie, Direct Energy, Energy Harbor, Constellation, just a few. If you're in energy retail already, you're probably familiar with a lot of these names, but we really pride ourselves on our supplier relationships. We run a ton of business. I think we actually achieved, top 5 in terms of the amount of kilowatt hours and therms that we're running through with some of our suppliers. So we represent a good amount of business, and again, happy to put those relationships to work for you guys.
Thanks, Allie. And I just want to go back on this real quick. So licensed all the regulated states, and that's just where we're licensed. The states that are regulated, there's always something we can do with them. And as Allie said, there's natural gas that's large enough, but also if the customer's large enough, there's potential solar options that are on-site solar options that are available in pretty much most of these states that are in the gray. As well as like all customers can purchase RECs, and we can facilitate that as well. So if you have contacts that go into these other states that are in the light gray, especially if they're larger, and I mean larger, I'm talking a half megawatt to a megawatt and above, or maybe around 50,000 decatherms to 100,000 decatherms a year. Just get in contact with us. We can figure out something, hopefully, that you can help service that customer and provide some value. So going with that, and Ellie will be back here in a second to talk about seasonal hedge strategies. Right now, I'm going to go to a little market update, and to start out with, this is historical, plain vanilla historical price trend. Again, I'm going to reiterate one more time here real quickly, not one more time, just reiterate again at the start of the call. We talk about natural gas a lot because, one, even with customers who are doing natural gas. Number two, it's the main fuel. It's a fuel on the margin that kind of sets the price for power. So as natural gas price flows, power price flows as well. I got tons of charts to back that up. If ever you're in a customer meeting and you want to show that, and why we're talking natural gas, Tilly can do that. With that, this is a chart here. There's two lines here. One is the spot price. That's in the green. That's the price you see on CNBC every day. Natural gas price. Woo, wow, it's up and down, and it's all crazy, and it's going up. That's no one's really buying the spot price. None of your customers really buying that spot price. So what they're really buying is, say, for instance, like what's going on in the forward strip, and the blue line there is kind of the 12-month forward strip. So for right now, that's kind of looking at, this is historical of what kind of the period of March 23 gas through February 24 gas, that 12-month strip, where how that's moved in the past, since beginning of 21. So you can see relatively much lower volatility. We really had a peak there in the low 6 area. Now we're in the low $3 area. Of course, a big drop we've had since winter seems to have ended early or never started, or never really took off, put it that way, back in mid-December. But spot price, that's the CNBC price. That's this kind of noise. I look at this more, and again, we're working with seeing charting capabilities with MSC for all our brokers. It's gonna be awesome. We have those in plans to have sometime in by the middle of the year. But anytime you need these kind of charts here for your customers and set up presentations, just get in touch with our pricing desk. Here is a NYMEX natural gas price curve. Now this looks out the forward prices and just kind of shows the ebb and flow of this. And you can see it's seasonal, and prices go up, higher in the winter and lower in the seasonal period, in the April-May periods, and falls, where gas isn't as used as much. But winter is definitely where it peaks out at. You can see here, though, the blue line is where we were a month ago. The green line where it is now. See the continued drop we've had. And here's the power price curve. It's a very similar story here. This is the three different hubs: PJM, Mass Hub, ERCOT Hub, and we'll be talking about those in seasonal strategies. You can see July, like ERCOT, the summer is higher than the winter. Is higher than the winter and higher, versus other territories like PJM. It's higher in the winter than it is in the summer, especially there in Mass Hub, where you're this year they ran oil on a lot of days, and you're competing for LNG with Europe, same prices, so you're going to have much higher prices out there. That's just due to the shipping constraint or the pipeline constraints. There is no pipeline. I'll put it that way. The most prolific shale fields in Pennsylvania ourselves to just through a few states, and to get out there's nothing there, so that they get LNG just like Europe does, and they compete for the same price. So that's why the prices are higher there. But anyways, this is kind of an interesting curve, and we'll go into this more a little bit later on, Allie will. Here we were just going to show this the winter fear gauge, and this is where we kind of look at it to see like what's the fear in the market of kind of like running low in supply of gas for the end of winter. And usually this is put in a chart with prices, and we kind of same kind of trend will be here, but I kind of like to look at this. And what's interesting here is, of course, this is March, April. So obviously we'd be running out of gas in March, we'd be injecting again in April. So that's why the spread gets wider when there's more of a fear of running low on supply. And you see there's no fear anymore because we're in negative area now. Yes, April's higher than March. So that happens. It won't get much more than that, but it's kind of it's gone down in 24 as well. It's kind of relatively below normal levels usually for this time, for this early in the time. So you're already starting to write off the 24 winter. Some market movement things here. Here is calendar strip prices right now. This is for power around the clock, raw power, shaping, nothing like that. I want to definitely reiterate that this is not necessarily the power price you can get. But this is the wholesale power price, and you can see now we're starting to dip into low 40s in ComEd, or in the low 40s in ERCOT now. And here's the price movement we've had as well. Look at natural gas strips. We're all in the $3 area right now for 24, 25, 26. And we've had some pretty good down movements here. Although power in in the Midwest and ComEd and AMR really haven't come down as some other territories. And that's just some other constraints that are going on out there. Natural gas storage, just a plain chart, just a normal chart here we like to look at. And this is kind of where we're at right now. You can, that black line there at the beginning is where we're at this time of year. And we're pretty much right around the average levels or slightly above, pretty healthy. That's why gas prices are where they're at and the plunge we've had. And this has come up from, pretty much between average and below. We're at mid-December, so we've had quite of a kind of turnaround there. But let's look at this. This is natural gas storage at Freeport online. So remember, there's this LNG terminal called Freeport. It seems like no big deal, 2 BCF a day of supply that would have gone out and will again eventually as we're starting to fire this thing up again. But we've had this offline since June. You think like, okay, 1 month, okay, that's 60 BCF. If starting in 6 months, that comes into roughly around 360 BCF. We are now, since June 17th, this has been offline. This is now right on 7 to 8 months. But it's significant. It's a story. Because if this is online, we'd have a different storage picture. And with that, you can see this is the gray line there. We go, this is the 5-year average. The black line is the actual where we're at right now. And then we just saw that in the previous chart. So we're slightly above average right now. The green line is the minimum. That's the 5-year minimum. That's kind of the historical minimum. We'd be below the historical minimum right now. We'd have a much different storage picture. We would be hitting kind of scary, more kind of like dangerous levels if there's kind of more winter that would show up here. And we'd probably be around $5 gas right now. So the market's discounting that, we feel. Here is based off of not Freeport, but this is based off of where we're at right now. And this is, again, healthy. This is not anything above 1,500 is really kind of relatively healthy. We are probably going to come in around that. Look at the weather forecast we have right now, although we can't really predict how long that's going to be. We can see out to the end of February, and the lows, the normal lows, normal weather, temperatures, they all go up higher. It's a 10-degree difference between now and the next 30 days. We're off the winter the winter lows of temperatures getting higher every day. So, below normals aren't really moving the needle much anymore. It won't. But this is where we're going to end up. Even if with kind of a colder forecast, we could be 14, 1500. We're healthy levels, put it that way. Which I think we're going to finish closer to that 5-year maximum. But different story again. If Freeport was in line, this would probably be, looking to end about 12, 1300. So, gas production. Let's move on to that. So you see the storage picture, and you see that Freeport online is kind of like putting us where we're at. So let's look at the future. Like, okay, well, what's going to happen here? We're at gas production. We're on the supply side. Well, here we are. EIA's forecasted 100.3. They've actually come down in their forecast down to these levels, and they might have to bring these down again because we are not budging. We did 100 level, and we're not really budging above it, and we're hanging out these 98.5, 99 levels. Seems like we're kind of topping out. And let's see what they have to say here. Well, CEO Chesapeake Energy, growth in gas supply is not needed in the short term. Industry should acknowledge that and reduce growth in the near term. Big energy company there. CEO of EQT, another big one. Forecast of 3 billion cubic feet increase in U.S. daily gas production might never materialize. That's a little ambitious with the current pullback in prices. You are going to see a slowdown in drilling activity. I think you're trying to tell us something here. And then a Wood Mackenzie report that came out. The average cost of drilling and completing a well was up 34% in 2022. Increased price of diesel, steel pipe, and labor really a lack of skilled workers and stuff are to blame. Then this doesn't look like it's going to necessarily, any solutions in this area as well. So the cost of drilling's up. The profit motives, they're more to kind of like, they're not just going to go drill just to drill anymore. They want to make sure they're going to make money. And at these prices right here, it's questionable. So that's something to think out. So gas production is topping out. That's the supply side. The demand side, LNG exports are growing. Look at that chunk of Freeport. That's coming back. Look what else is coming on in 24 through 26. That's an extra 6 BCF a day that's going to be coming online there as well. So risk reward looks pretty good here. That's what we're trying to say. The probabilities are higher prices, not lower prices. And that's what we like to look at. It's really what the probabilities are. So it's a good time to lock a portion of your power and gas needs for the next 3-4 years. Some noteworthy items here. Recently passed RPS legislation. RPS is Renewable Petroleum Standards, a state-by-state thing. Locked in current RPS rate till 26 for all contracts. I'm sorry, I forgot to put this in here. My big apologies. This is for DC here, DC area. So Pepco DC. I'll make sure I correct that in the slide we send out. But Pepco DC recently passed RPS legislation locks in current RPS rates of 26 for all contracts signed before March 1st. It's kind of a grandfathering thing. So if you can get in the next 2 weeks here, get contracts signed in Pepco DC through March 1st for any period before 2026, it's locked in. You can have savings up to $3 a megawatt hour for that period versus if you contract on March 2nd. You will be, and it's a period that starts in 2024. The customer will be paying extra about $3 a megawatt hour. So keep that in mind. PGM auction for capacity auction for this June, the 24-25 planning year, which is June 24 through May 25, is still delayed. So make sure you understand the contract language. It's quite important. If these capacity prices go higher, and they're very low, they're historical lows, so it is going to go higher. Make sure you understand you're doing apples-to-apples comparisons of what you're getting in each contract. We're here to help. We've read these contracts, we know them. We have people on our staff that have written these contracts at suppliers, so they understand all the stuff in there. We can help you out with that. Solar PPA prices were up 33% over the past year. It's mostly due to supply chain issues. So, so solar costs are higher, and solar PPA prices are higher. So, that is. But of course, power prices are I guess they're kind of like about the same levels they were a year ago. So it's not as competitive with solar anymore, but they're still viable with the tax incentives that are out there. For the conversation, we're here to help. And lastly, be careful using price compare rates for savings to show savings. These can change over the term of a long-term contract. So what you're showing on a price compare rate is the price compare for that month. It doesn't mean it's a price compare for the next month. It doesn't mean it's a price compare for a 3-year contract. A customer could come back and say, I got their rate and utility. And if you show guaranteed savings, I've seen this done before, they can get out of their contract legally. That's usually the case. So, or I've seen companies get sued before. So just be very careful using that word savings, and make sure you're putting disclaimers out there. We're going to be putting some of our proposals here as well. Lastly, strategies, be disciplined. Consumers are not taking a long position. They are covering a short position. That's basically what, I think it goes without saying. You'll have customers saying all the time, I'm not ready to take a position yet. Well, you're not taking a position. You're just covering your short position. You already have a position. You're short the market, which means short's a very dangerous position. You got to make sure you have a strategy. Make sure you're setting strike prices as well. These can greatly increase their chance to participate in a market dip. And hedge something. Take advantage of drops, but hedging a partial percentage of load and the remainder later. Layering hedges is a great strategy to have. The main thing is here, have a strategy, work with your customers and have a strategy. That's really, if you focus on just helping your customers set strategies, that's going to help you in the long run rather than just saying like, yeah, I'm an expert and now it's a great time to buy now. It's more so, do you have a strategy? In case power prices go up to $60, $70 again, or gas prices go up to $7, $8, what's your strategy? I've seen a lot of customers get burned over the past 20 years I've been doing this by not having a strategy, and they end up buying at the market peak because they panicked, and they had to. They didn't understand what position they really had. Anyways, that's it for today. Again, any questions you ever have, let me know. I'll be sending this slide deck out at the end of the call, and I'll let Allie take it away now with seasonal purchasing strategies.
Awesome. Thanks, Scott. So this webinar will be going over some of those strategies that Scott actually just mentioned, and just going into a little bit more detail, looking at some pricing trends and making some recommendations for how you can help your customers moving forward. So looking at this chart here, we actually looked at this a little bit ago whenever we were talking about product structure, but I wanted to bring it up here again because what we're showing here is a solid blue line. That's a fixed price. So if you are a customer and you're paying a fixed price, you're going to pay, for example, 8 cents all 24/7, 365, no matter what you use, assuming it's 100% swing. That fixed price is being packaged from your retailer. And the retailer is going out to the wholesale market. They are basically picking and choosing different blocks, different hedges, different amounts, and they're packaging it all together for you so that they can keep your price the same. That's essentially the way a fixed price contract works. So your supplier takes a position and then you reimburse them for that position over time. But that's the way they're able to keep that price the same. Part of fixing a price includes a risk premium. So fixed pricing does come at a premium. It may or may not be the most cost-effective thing. Like Scott was saying, we don't guarantee savings with a fixed price because that's not always the goal of a fixed price, to save money. The goal of a fixed price is to provide budgetary security and pricing certainty. It's to limit your exposure so that you know that if the market has a blowout and we have a huge price spike, whether it's natural gas, regional prices, congestion on the grid, that your price is protected and you can still continue to use whatever you need at that previously agreed upon price. The index line that we have here, that dotted green line, is the closer to a real-time energy price. So we have local hubs that are all pricing energy. We have those all across PJM, New York, ERCOT, and those prices tend to rise and fall with our economic fundamentals, supply and demand. So those index prices are generally more expensive during the peak periods. Those are times when customers are using the most energy and demand across all customers is at its highest. Those are your summer afternoons where everybody has kicked the AC on, in addition to their baseline, lighting load or mechanical load or things like that that we have to account for. That also happens in the winter. Obviously, we do have electric heat purposes, so whenever we have some weather extremes, we also tend to have higher demand for power and for gas. Prices are less expensive, though, during the off-peak periods, aka your shoulder season. If you look at your spring and your fall, you'll see that index price really levels out. These are times when we're not necessarily approaching any sort of weather event. We have really mild temperatures. Sometimes you don't even have to turn on the AC. You can just open a window. Those are the times when you're going to see very, very favorable real-time pricing. I just looked as we were starting this call at PJM, just for an example. And all across PJM, the real-time price right now is between 1 and 2 cents. So that's the real-time price that we're getting, and that's what we're talking about whenever we say that the goal of a fixed price may not necessarily be to provide savings. It's to provide security, because you do pay a premium. You're not going to pay 2 cents for the energy that you're using right now if you're in a fixed price contract. So those are some of the fundamentals that we're looking at here. Moving on to our next slide here, we have just a few tips. Again, these go with exactly what Scott was talking about earlier. Go long. Your forward lock agreements offer a ton of benefits, and customers aren't always thinking this far in advance, but it's a great opportunity for you as their consultant to sit with them on their side of the table and say, look, the reason why it's great to go out so many years is because you can still get really awesome value, and you can put a good hedge in place to give you some level of security before all of your risks are really known, right? Because we have the ability to purchase prices all the way out in 2025. We don't know if there's going to be some sort of, natural disaster, tornado, hurricane that impacts production. We don't know if Freeport comes back online and LNG demand goes through the roof. We don't know what our storage levels are going to look like in 2024 yet. But going long gives you the ability to make a purchase before those risks are even known. So they're not in there, and you can get some really good value there. The other thing that we want to talk about with going long is longer-term index agreements. So this is a way for you to appease customers who balk at fixed pricing. They say, look, this fixed price is just too expensive. Say, okay, that's no problem. If we think that pricing is going to go down and we're sitting here, we're looking at it and we're saying, well, I'm looking at this fixed price, it's way too expensive. We can still offer them an index product that allows them to take advantage of some of those dips in the real-time market. And then whenever pricing is favorable, whenever we do see dips in the market, you have the opportunity to hedge either all or part of your energy costs. And you can do that. You can also take a layered strategy to doing that, which I think is our next point here. If you do a partial hedge and you're only fixing, say, 25% of your load, then you're limiting your exposure that much, but you can always go back and layer in another 25% or another 50%. You can execute this layered strategy all the way up until your contract start date if you have a forward lock. For example, we have customers who don't start their agreements until December of this year, and all year we'll be looking and identifying the times when they should be executing a hedge for certain periods, unless they really want to leave a position open this winter, which is, it's fine. We can get them to a fully fixed product via a layered hedging strategy, limiting their exposure, but providing a better weighted average fixed price because you layered in all of those fixed portions over time whenever the market was favorable. I actually just read a white paper that was talking about these types of strategies, and this blended strategy where you're identifying with your customer, okay, let's let's not you pull the trigger on 100% of your load, right now. Let's wait and let's look for some market opportunities. Yes, let's limit your exposure, but let's give you the opportunity to participate in some of those market dips. Let's give you the opportunity to see some of that real-time pricing. And if we don't like it, if we want to say, let's not. If they start seeing higher prices, or if you as their broker understand, hey, today's a demand. We're going to be having some cold weather moving in. Let's go ahead and put some fixed pricing in place for all or part of your energy usage. That's something that we can make. We can actively manage that for them if they want that as well. So lots of opportunities with those longer contracts. And putting your customer on a index product to start gives you the ability to leverage those open positions during shoulder months and off-peak times. So if we have any questions, let us know. But this is a great way to sell your customers something different, rather than trying to convince them why they should put a totally fixed rate in place right now. Take a different approach. Let's say, okay, if we think that pricing is going to go down, we don't think that this is going to be the best price. The price that I'm offering you today may not be the best price on the market 2 months from now. That's fine. We can still look at an index agreement. We can still help you to actively manage your cost and be in control here. Like Scott said, the most important part here is to take a long-term view to this cost management. And to help your customer understand the benefits of doing so, because it really does pay off, and it's a great way to develop your relationship with your customers.
Awesome, thank you, Allie. That's so in depth. That hits it spot on. This is where we bring value to our end customers is just by working on strategies like this. This is where we really should be selling is we sell solutions and strategies, not savings, but solutions and strategies. It's timeless, no matter if the market's higher or lower. You can't, back when the price was back in like last September, no way you could sell savings compared to what they might have hedged a year or 2 years before that. So, but if you sell solutions and strategies, that's going to win the game. That's going to win it for you. So moving on to any questions that we have out there. I see a question here. This is actually a good question, and I also want to give a product feature we're going to be having here shortly. Where can I get natural gas, these forward curve prices, and where can I get power price information? And wow, that's a great question, because I want to again highlight a feature we're going to have, and so power price information isn't out there, is not a public thing. We subscribe to this information, and we are going to be putting it into MSC, and you'll be able to view it if you're a customer of ours. You'll be able to have rights and you can do that. And you can create charts off of it, and it's going to be quite dynamic, and we're really excited. We just got discussions going this week on the design of it, so we're excited about that. Natural gas, you can go to relatively just go to put in natural gas prices, CME, or go to bar chart, Bloomberg, all of them, but I think bar chart I'm partial to. Let's go to bar chart, and easy to find natural gas prices, and the whole curve prices will show up that way. But again, that information, we're going to be having that, and all kind of like charting capabilities and stuff like that within our system as well for our customers soon here. Hopefully by the middle of the year is our plan. It's going to be really, really quite valuable for you guys to be able to put this stuff in a presentation, to create charts and download them, information and all that. So we're excited for that. So moving on here, just want to again just talk about, we're here to serve you guys. This is our team, our picture. We're so proud of our company here, and we just we're all here to help you guys. It's our number one goal every day. That's our mission, is to help you guys help serve the customers better. helpful solution to help bring value. So anything you need from us, just get a hold of us. We're here to help you guys. So with that, I'm just going to let you guys all know. Have a great rest of the month here. And next time we'll be talking will be in mid-March, and we'll get the date on that pretty soon here. And it'll be nearing the end of winter, and just enjoy it all. And again, we're here to help you guys out. So take care. Have a good day.
Thanks, everybody.